So we're at day 2 of the KJ Cash Bootcamp, and today, or last time, what we talked about was just mindset, some different tips and things that we need to do in order to get just in the trades the best way possible, and then to manage our trades the best way possible, and then the way to look at the markets the right way. So in the spirit of the fact that we're looking at this ocean and we put our buckets in there at any time, we're going to look at these 2 particular indicators in order to find some confluence and then build off of these to continue to find ways to enter and exit the market. Now, generally speaking, one of the main things that I just want to mention is that, for one, we want to try to trade with the trend, and there is a difference in trading with the trend and in catching reversal trades. And then for 2, we got to understand what trend is and what we're looking for. Now, although we do know this, I'm just going to back up and talk about it a little bit. When we have price consistently dropping, that's considered a downtrend. When you see price, it looks like stairs on its way down. When you see price looking like stairs on its way up, that's considered an uptrend. And if we back it up a lot, right here, for an example, where price is kind of just going sideways, this is not an uptrend, this is not a downtrend, this is consolidation. Now, the type of consolidation, it's either accumulation or distribution, debating on whether it's going to buy or sell. But this is between this point and this point right here. You see price kind of didn't break this floor or this ceiling. It stayed in between this zone. That's consolidation. Okay. And so knowing where the market is at, what the market is doing, helps us, because we want to take sells on downtrends, buys on uptrends, and either wait for your confirmations on consolidation or wait for the breakout, depending on how you want to trade it. Now, keeping all of that in mind, there is a concept called a swing high and a swing low, which is pretty much when market pushes all the way up, finds a ceiling, and then pushes all the way down, finds a floor, pushes all the way up, finds a ceiling, pushes all the way down, finds a floor, pushes up to find a ceiling, so on and so forth. So these are swing highs and swing lows, and we are basically looking for price action to happen in between those. Now, you can draw a Fibonacci, which is just a trading tool to look at the Fibonacci levels. You can look at where price actually stopped and try to start to draw some support and resistance. You can look at volume as well on these swing highs and swing lows to really get together a good idea, a good indication of where price can be or may be looking to reverse from, right? Close this out because we are in a bearish move right now. And that was actually the sell opportunity. So with pivots, what it gives us is a self-generated swing high, swing low, overbought, oversold region, and a consolidation region in the zones. Now, I know we all have watched the video, so I'm just sort of going to compound on the information, but just to go over some of the basics, you want to look for your ultimate sells at the R8 or higher, your buys at the S0 or lower. When price is at the P4, this is also a heavy rejection area, so you want to see price action play out at the P4. Also, you can expect consolidation between the R5 and the S3. These are consolidation zones. So once price hits, this is like the median of your price action. And this is the overbought looking for sells. This is the oversold looking for buys. Now, a couple things to know about pivots. And I'm just going to hide the DeLorean for a second, and then we'll go over that. And then we'll talk about some confluence. Is that it does it on its own. It's a self-driven algorithm. And in that, it has to have time to adjust. So you'll find that not every single time price is down here, does that mean it's going to buy back up? It could be selling down for a consolidation and a further draw. And I'm just saying that to say you don't want to marry these pivot levels as if, okay, well, no matter what happens, once it gets here, I'm looking for a buy, because that's not actually guaranteed to play itself out the way you want it to. Give me just a second, guys. I got a couple things just taking care of. We are live this morning. We are live. It's Friday and the markets is moving. So we are in there, which means we got to be paying attention to everything. So Let me just modify this and that. 36, 2, 1. Now, check it out. What we want when it comes to pivots is to see a hard break and close below a pivot level. Now, how do we know which pivot levels are the strongest? That's a question that I always ask myself. And that's where you want to look for multiple time frame confluence. Now, I go off the 1 hour in general, and then I wait for my moves. I break it down to a smaller time frame to see what's going on, larger time frame to get the key levels. So if we go to the 4 hour time frame, and we're looking at our pivots, I'm also just going to make this, no, I want to do this for the sake of the training. So yes, see that. So our 4 hour pivot levels, we got 37.10 is a pivot. Let's go to the daily. We got 37.50. This line is showing us that our pivot levels is about to adjust. So I'm just going to do this so we don't have to see that. 37.50, 35.93 are daily pivot levels. Okay, 39.06. Let's go to the weekly. We have 39.06 on the weekly, which is where price actually rejected from. 37.50, 35.93, right? So keeping in mind 35.93, 37.50, and 39.06, we go back to the 1 hour. We see 39.06, 37.50, 35.93, and they happen to be the S0, P4, and R8. So these are actual key levels that we're looking for price to trade in between. And then these here would be key levels on the smaller time frames. So if we go down to the 30, the 15, and the 1 minute, we'll find those pivots to be more of key levels. Now this 35.93 should be consistent through everything. This 37.50 is, and then as you see on the 15 minute, we don't have our 39 or the other one down here. So the 15 minute, and this is just important to see so you can recognize price can move outside of your pivots. Just don't marry it, but just look for the confluence, the hard breaking closes. So on the 15 minute, what we got was price came up to the R8, gave us a doji, came all the way back down to the S0. We got a full swing up, swing down on the 15 minute, while on the 1 hour, it was nothing but a S3 to R5. And that's what I mean. So it's S0 to R8. This is S0 to R8 on the 15 minute. But it's only these two pivot levels. It's just a consolidation between the P4 and R5 on the 1 hour. And that's just important to see, because the same way you'll see swings between the S0, 35.93, and 39.06, right? This is a lot of pips. On the daily, it's not so much. It's two, just like the 1 hour and 15. It's only two pivot levels. And so that's that as far as pivots goes. Now, how do we look for our trades? That's kind of the question that I want to answer right now. And how would we look for them if we were just using pivots? And of course, I don't just use it, but it is important to understand these concepts so that we can get it going. Now, I only look for sells on bearish candles, meaning I don't want to, unless it's a pending order, at which point I don't, once price hits the level, if price hits the level. Now we can talk about pending orders as we go on in this boot camp. But I look for market execution. I look for sells on bearish candles and buys on bullish candles. So if I'm thinking, okay, price is going to reject off the R8, even though this wasn't the R8 at the time, I don't think, but even if it was, perfect, I would not be looking, see, that's what I thought. I would not be looking to, and it wasn't the R8 yet, but I would not be looking to sell yet, right here. This is not a sellish candle. Now, if we were looking for a sell, this is a selling candle from the R6 to at least the R5, and we see TP smacked, easy. The only reason I'm not looking to sell is because price can pull back up into the R8. We know that this is just about a, what did she say, 90% chance of reversal, 95, 98 up here. So the +1 is 95. The R8, I think, is either 85 or 90. And the +2 is 97%. It just gets higher as we go. This is not reversal. This is just time to look for it. And that's important to note as well. But as we see price action play out, we see price does wick up into here. Then it comes back down. This was a sell opportunity. But if I'm not mistaken, this was Sunday. I was deciding to be patient because I felt like this was the sell setup. So after this, I had also looked left, saw that there was a lot of confluence, and we'll talk about that later. I had a pending order set for about right here because I knew price was going to come stop out these early Sunday sellers, as well as some sellers that's left over here. It did, and it tanked, but I just want you guys to see it. And that's why you don't really take sells on this. This you could have taken them, but you would have had to TP the very next pivot level. And just as a rule of thumb, for new traders, TP the next pivot level. You don't have to be too proud to just take that one pivot level move. If it's not enough pips, it's okay. Look for the next move after that. But this is the easiest way to get into the habit of seeing TPs get smacked and then getting into the groove. It's just to TP the next pivot level. If you want a larger move, you have to be more patient and go to a larger time frame and wait for the same confluence. And just go pivot level to pivot level, because that's just the easiest way. Now, there's other ways if you have more and if you have a little bit more experience, but this is just for the sake of us getting these right. Now, I'm gonna hit play so you can see how price action plays itself out just with these pivot levels. Understanding this is a major reversal zone, but not guaranteed. Consolidation zone down here, median here. I personally was not in the trade. I had my pending order here and I was just waiting on it to smack right above the R8. Again, if you were taking market execution, you would have wanted price to come above the R8 and then rain through the R8, putting your stop loss above, and we'll talk about that in a second. We'll just watch. So we come down from the R8 to the R6. Also keep in mind that even numbered pivot levels are considered the stronger zones, okay? Even numbered ones are considered the stronger zones. So price traded down to the R6. Looks like it's headed back up now. You could have looked left, saw the R6 price action here, and went ahead and placed some orders. Now check this out. We got our wick out, put us in the trade right here. That one put us in. Now that isn't candle. I just have to point this out because this is what we look for. Now you could have waited for the close of that candle. Obviously, this was where my limit got activated. I'm actually still in this trade right now. I have not closed it yet. And this was a cool candle. This was actually a very cool candle. I would have TP'd here or here and had my stop here. How do you pick your TPs? Next pivot level. How do you pick your stop losses? You look left, you see the pivot level that has not been touched, put your stop above there. This is the only one. So we're not going to put our stop at entry. We're just going to go here because obviously this has not been touched. And it doesn't even get touched here. So the stop would have been safe the whole time. This was just a re-entry and a more ideal entry, honestly. And another thing to look at is price is at 39.05. So 39.25 is 20 pips. So you got to ask yourself, can my account handle 20 points of stop? If not, you got to adjust your entry so that you can be closer to your stop and just hope that price comes all the way there without blowing you out. Now that we mentioned that, we watched price action. I was also saying this is a nice bearish candle. This is a nice bearish candle. You could have gotten in here, put your stop here, TP the next pivot level, and it smacked. It's a nice bearish candle. Yes, it retested entry, smacked, retest, smacked, pulled up. So I just want you to see that these bearish candles mean something. This is a nice bearish candle. When I say nice, this right here is not that nice. It's a cool bearish candle. This is really a bullish candle that showed us price is getting ready to push up. It's an engulfing candle. That's the best way to put it. When you got the base the same and it closes above, we got engulfing candles. And honestly, that's what we look to trade with these pivot levels. Saying that to say, so we want to get some engulfing candle price action out of the pivot level to understand that we're headed to the next level. Like this one here, boom, nice close. We got some retests. Price did eventually come down. You see that. So let's go back. We're going to wait for our nice, now that price is traded up, if we're looking for market execution, we're going to wait for that nice bearish engulfing, enter to the next pivot level. I think he's going to give it to us right now. Boom. Now this is the next pivot level. So we can even enter here, TP here. Very, very simple. Stop loss here. That's a one-to-one trade. Well, if we enter here and the stop loss is here, we can even TP here for it to be a one-to-one. We can just place our stop This is just the safest stop. This would not be a complete one-to-one because we would be looking, we stopped, if we went here with our stuff. Actually, yeah, that is a one-to-one. Damn near. Just maybe just a little bit less, but it's gonna smack. Not only will that smack, if you're looking at the charts correctly and you recognize imbalances, you know price is gonna have to come to revisit this P4 that never got any price action and could potentially sell down to the S0. We look at what happens, just looking at pivots. Let's just watch it come to the P4. All right. Understanding that this is the key zone. So price came to the R5, retested here, maybe re-entry, maybe not, R6, but we're really looking at that P4 slot. I'm just gonna let it play itself out. I'm actually gonna fast forward these candles just a little bit so we can go ahead and see that shit slap. We got some consolidation at the R6. Keep in mind, the even levels are the ones that hold the most weight. Consolidation came right in. Now, how many days did that take? That was from Tuesday to about Wednesday, 1 day. I'm still in this trade. Soon as price came in, traded right back up into our sell zone. Obviously, if you know, this is a 786. You know what I mean? This was a CV zone smack. Came right down to our S0. This is just looking at pivots. We don't have to do anything to be patient and understand that price has swing highs, swing lows. We're going to look at multiple time frame confluence. The 4 hour right here gave us everything we needed on pivots, right? Now, honestly, this was telling us to sell here, but if you're smart, like I said, the moment you get this breaking close, and it was news too, but that told you price, well, now it wasn't no close, but price is looking for that. And then it's like, I mean, it came right to it, which is kind of a little bit unfair. 1 4 hour candle came all the way down. You know, that's why you got to change them time frames. But it's like when you're looking at it and you saw this pullback, of course you were thinking, okay, price. And that's perfect. I'm so glad I'm doing this. And this is why you only buy on a bullish candle. You don't buy on a bearish candle. Because if you were right here saying, there's no reason you should have been getting into a buy to the R6. You should have been looking for a sell to the P4. It just broke out. So you're like, where's the sell at? So the moment we get this, right, you should not have entered a buy. This is not a buy signal. Even if it entered, even if the next candle is bullish, what you want to wait for is to close above this and take the buy to the next one. You don't want to buy this rejection, especially not the R5, because you want to buy on a bullish candle. I cannot express that enough. That is going to stop a lot of heartbreak. Market execution buys need to be on bullish candles, and limits need to be with multiple levels of confluence, including order blocks and liquidity grabs. You have to have that and pivot levels for limits. For market X, you have to get a bullish engulfing out of a pivot level. This is stuff I would just write down. I'm actually never said that out loud, but this is facts. And look at what happens. I wish it could have, I need to take this slower because this is, some people would call it a fake out. This is not a fake out. This is a setup. They're literally giving you money. They're telling you, look, we didn't, and it's funny because in my head, I'll start to do this as I'm looking at price. I'm like, well, it never, even here, I was like, well, it never really gave us any good price action down here. So price is headed here. Like, that's what I was thinking. Like, if I were to get into a buy here, it was a weekend ass buy. Like, this was not, what am I trying to say? This to me,
there's not enough volume for a buy right there. So
this to me looked like a target for this sell because of how the buy took place. Like how this didn't come into here, trade, and then buy up. This would have been the buy up if I would have got a price action up here. Yes, this was the buy from the R5 to the R6, and you can tell by how price action just lifted up in there and then froze. And so saying that to say you look left, you're like, okay, I'm not looking for buys. So when price comes to smack this and stop, you're not looking for the buy, really. You're trying to see, are we going to get it closed below for the sell? So as price continues to push up, ironically, we're in a news candle, but just keep in mind, we're only talking about price action because you can trade news by looking at price action. you're recognizing you need to close above the R6 to continue to the R7. And any rejection here is that meltdown. That's what I'm getting at. And so you just got to have that confidence to see, okay, we got some rejection. This is not a buy. Now this candle just came in so fast and hot. I'm telling you, it opened here, pushed all the way up. It looked like a nice bullish engulfing, but we were not in that buy. We're waiting for it to close above this or reject. And then it just started coming back down. And then it's like, this is where I look left. And of course, I actually did not take a market entry, market X here. I took mine here. I waited for this joint to come all the way back down through the R5. And it was different on the 1 hour. Because this 1 hour candle, yeah. So I actually took it up here. I waited for price. And this is a multiple pivot level move with these news candles. So on 1 hour, you could have got in for the buy here, TP'd here, saw it keep pushing, got in for another one, TP'd here, saw the rejection, saw it pulling back out, or just waited for the 1 hour close. Now, if you don't want to get into this rat race of TPN and all of that shit, wait for the 1 hour close and pull the trigger. Because all that happened during this full 1 hour candle. Open here, pushed all the way up. We know that hard breaking close above this means push to the next level. We were going back and forth because we saw how crazy price action was going. So we're not going to let it fake us out. We're going to be on all angles. You see it pull it back. Now, for me personally, once I see price action pull back within this, so it broke this consolidation zone here, right? The R5, R6 area, if you look at price was just bouncing in between that. So price came up, broke it. I would have liked to close above that to show my push up. We didn't even get the close. Price just came right back. It came right back. It was a bullish candle with the long ass green wick up here. And I was thinking if price closes here, the next candle can push up to fill this wick. But no, it kept coming back. It kept coming back, at which point I started looking at this candle. So when you're getting into buys, you want to put the stop right under the last candle. Like if you're getting into some risky shit, put the stop under the last candle, because when you're looking at that reversal, price won't come back to that last candle. So like if we would have got into a sell, price didn't come back there. It didn't come back there. It didn't come back there until this one. So then it's like, boom, get out of that shit, right? So right here, I'm looking, ooh, price actually came back to the bottom of this candle. So that was not a buy opportunity, not at all, because price is now bearish engulfing after this long ass wick. What happens now? We got a fucking impulsive push through the P4, which we just talked about. We want these types of candles for the sell. So if we would have just waited just to see the 1 hour close, right? Of course, it looks like a buy at first, and there's some buy bullish action from the R5 up. You can say, okay, a close above the R5 means that push up potentially to the R8. Take it pivot level to pivot level. I just wish it would go a little bit slower. Okay, it's going to give us some slowness. Boom. So right here, we're like, all right, what do we got? That break and close. We got stops here. We're going to TP here. We got to take this shit slow. What we got? Oh no, it didn't give me much. This is, and that's why we didn't get the breaking. This was actually perfect. So right here, we were thinking, if we get the breaking close above this, we're going to put our stop here. We're going to TP here. It shot to here. It did not break and close. It actually broke and closed here, which I keep doing that zoom. This is really good. This shows us price is stopped. Price is ready to drop. Nothing less. So where will we then put our stop loss if we're entering here? Right? We're gonna have to look left, and this is where we get into some crazy trading now, because it's like we are gonna have to put our stop above the R8 at this point because of this wick. This wick is showing us that any candles can potentially trade up into here, even here. So the safest stop would be here. The riskier stop, but still safe based on this price action, would be here. We are not going to put our stop at any pivot level under this wick, honestly. And this is where you got to ask yourself, well, can my account handle this trade? If you weren't in here, if you didn't get in as price was pulling back through these pivot levels, which honestly are all entries if you are experienced enough And then, of course, going to multiple time frames, you also get more confluence on what you should do when. But if you didn't enter on any of these for that stop to be here, and this is why you also got to keep in mind of your stop when you're getting ready to get in. So the whole time you're like, if I'm getting in a sell, I'm gonna need my stop to get here. So I need my entry as close to that as possible. So there's been times where I've actually sold, and that's why. So like, yeah, you know, I'm telling you, never sell on a bearish candle, never buy on a bearish, never sell on a bullish. There are, of course, times like that's the safest thing to do, but there's times where, okay, my stop is here, I'm gonna have to pull the trigger even though it looks like a bullish candle, but I understand what's about to happen. This might be it. We might add deload next time because this is good. This is good, and we're going on 30 minutes already. So as price pulls back through, we get that hard breaking close below. We're looking for entries, you know, stop above this wick, above this pivot level. This is where we want to hide our risk. We want to let price move and then move our stop in profit. Now, since we're going 1, 2, 3, 4 pivot levels up for our stop loss, we can even look 1, 2, 3, 4 pivot levels down for our TP. Now, that's not the only thing you want to do is just say, well, I want a 1-to-1. Even though there is a thing such as measured moves that I do want to go through, and we could be waiting on a measured move. Let's just look. Boom. You know, this was a move. Same exact move here, right? So that's one move, same pips, same pips. You know, type shit. You know, that's a little complicated. I'm gonna go over that later, the measured moves, but basically you're just looking for the market to do the same move it just did again. And so this wouldn't be crazy. There's more areas of confluence to see, like order blocks, but I want you to see this play out because it's a long stop. But let's see TP smack though. Let's see what happens, because price literally just starts to melt at this point. Now you could have even just put your stop here, and this would have went back to the concept of put your stop above the last candle, because again, price never traded back up into this area because this was that last candle. So if you didn't want to hide it way up here, even though this is entry, stop right here. Once price pushes back up, and we can talk about wick to body rejection later, it never pushes past the body of this candle. Re-entry here, stop again here. Of course, safest ones are here. Melt back down. If you don't want to go all the way to the 37.30 for that 1-to-1 action, we could just go to 37.50 for that pivot level action. Now, right here was where I was like, I'm not getting in for a buy because it never hit 37.50. The very next candle, it just smacked, and watch what happens next. At this point, I honestly removed my TP because I was like, oh, wait a minute. I said, this shit is dropping. I said, it's really dropping. And I had like a, just watch. Just watch. Just watch. I removed my TP. Now, this was why I was saying you want to buy on a bullish candle. I mean, yes, you want to buy bullish, because if you check this out, this is such a good training. Right here, you would have been buying on the bearish, and you want to wait for the bullish close above this to buy here. We never got it. There is no trade here. There is no bearish breaking close. There's no bullish breaking close. This is what helps me have so much patience sometimes, because it's like, well, I know I would have wanted price to come into here and then push up for my buy, or come into here, then push down for my sell, or come into here, push down for my sell. But I'm not just gonna market, like I'm not gonna just take a risky ass buy here because price came here thinking it's gonna go to S2. Like that doesn't
Yet again, volume tells you not to even take the trade. Look how low the volume is.
Exactly. I wasn't even looking at the volume. You know what I mean? Honestly, I'm just looking at the pivot levels and these weak ass candles. And it's like, we need to close above this to go to the next one. We need to close below this to go to the next one. We haven't gotten either. So then we just wait. Take that off. Let's just wait for something. We got the close, and it damn near closed at the next one. And it's like, it finally hit it. So and then it's just going to keep melting. And this was where I removed my stop, because I was like, nah, this shit is finna come on down. And it came all the way down to 3,700. Now there's like I said, we're gonna build multiple levels of confluence to see why price reversed like this right here. Because there is a reason, and this was actually a supply zone back in the path, and it's a key level, and it's an even number. But excuse me. You continue to watch price action play out. Now we got our pivot level shift, right? We're looking at a potential continuation down to the S0. We just need price action to show us that it's willing to do so. We got some price action here. The close above this means that push up. The close below this means that push down. Does that make sense?
For sure, absolutely.
So because I remember it also that I don't want to just be watching price, but I want to keep this as a training for the sake of the recording. Then I'm gonna stop it, and then we'll just go over some more stuff. But just for some notes, just to remember, the R8, the P4, the S0 are typically the strongest zones. The even zones in between there are even stronger, and then the less ones are just areas we want to keep in mind. We wait for hard pushes through the candles, preferably engulfing candles, meaning a doji and then a hard push. Everything else symbolizes, in my mind, retail trading. We want to trade with the banks. The banks come in hard and fast. They don't waste a lot of time. This right here is retail. This right here is institutional. So institutional. If you ask me, the whole thing was a setup for the sell down. But it's neither here nor there. We're just talking about pivots. The next thing, pivot level to pivot level. You want to hide your risk above. Well, so if you're looking for a sell, you're going to hide it above the pivot level. That has no price action, because there's no way price can go back there. If it does, we missed the buy. And somewhere down here, it gave us a buy opportunity. Next thing, you want to go for a 1-to-1 or higher. If price does not give you the ability to go for a 1-to-1 or higher, don't take it. Just wait for the next setup. Wait for your pivot levels to adjust. If price comes to a major zone and starts to consolidate, the pivot levels are gonna shift. There's no shame in waiting for them to shift and then waiting for a setup to make sure your TP smacks. Don't feel like because they just shifted, I'm gonna go with the old levels. No. If they shift, they shift. Go with the new levels, because this is based on volume, it's based on price action, it's based on Fibonacci levels, it's based on support and resistance, it's based on a lot of things. Practice. Lastly, multiple time frame confluence. What you want to see, let me take this replay off so we can see where price is actually at now. What you want to see is which pivot levels are on every time frame and how is price reacting on those time frames. So if we even look at the daily, we got a potential swing from this R8 area to this S0 area. That's just what's been happening. Now, once price comes here, starts to push up, we'll be looking at that potential swing up. Until then, price literally looks like it's swinging downwards. If we look at the 4-hour, it should be looking the exact same way. Actually is the exact same way. R8 to S0 swing looks like it's fully in action right now on the 4-hour. 1 hour, same thing. So you want to go from your higher time frames to your lower time frames, depending on how long you want to be in the trade. Look for confluence, and then pull the trigger with confidence. All right, I think we're going to stop it here for the sake of the recording. But this is day 2, just pivots. Next, we're going to add DeLorean with pivots so that we can get some confluence with our EMAs. Exponential moving averages is what we're going to add on day 3.